Yeah, David, I mean, we believe that it's possible we're getting to an end to this implementation of internet regulation. I think it's been underreported that there's some very important meetings around senior leadership retiring, potential some changes in leadership. Those meetings begin in November, and that might explain why we've seen this implementation of internet regulation in a very short window. At the same time, we've seen the internet security law go into effect in September, as well as the personal information protection law that goes into effect in November. So maybe we're getting to the end of this. We certainly hope so.
Right. Well, assuming you are correct, do you have a sense, though, as to how the profitability of so many of these important Chinese companies, many of which trade here and certainly are a part of your ETF, are going to be impacted?
Well, thus far, the Q4 2020 financial results, which we got in February and March, were quite strong. The Q1 data that we got in May was quite strong. The August Q2 data, Alibaba, 34% revenue growth, Tencent, 20% revenue growth, Pinduoduo, 89% revenue growth. The price action doesn't agree with that statement that these companies are still doing well, but we think it's really been the implementation, the lack of transparency that's led many investors to the sidelines. They need confidence that we're at the finish line or close to it in order to come back into the names.
Yeah, we've been hearing about that finish line, and it just seems to keep moving. But I mean, to your point about the performance of the companies, Alibaba's committed, $15.5 billion over the next few years towards common prosperity. I think Tencent the same. That's got to be coming from somewhere, doesn't it? Probably from shareholders' profits.
Sure. I mean, these companies have tens of billions of cash on hand. At the same time, David, we point out Alibaba increased their buyback from $10 billion to $15 billion. Tencent's been buying back stock for about 3-4 weeks. Every day they buy 200,000 shares. Baidu in their Q2 earnings said that they bought back $3 billion worth of stock since April 1st. A little company called Joy, the ticker's YY, they just announced they're going to buy back $200 million. That's because they're actually trading below book. They actually have more cash than the market cap of the company. They should just take the company private. So I think if the companies felt like they were going out of business, wouldn't they be hoarding cash? Why would they be buying back their stock? We think it's a sign of confidence from them.
Brandon, how close are you watching the situation that's playing out right now with Evergrande? I mean, $300 billion in debt, on the brink of default. There do seem to be concerns out there that could have broader ripple effects to China's economy, to markets there, to also how this crackdown with regulators continues to play out.
Sure. I mean, Evergrande's been the company with 9 lives that they've seemed to always be running into problems, and they always pull something out of the hat. And I think ultimately Evergrande is too big to fail. Several years ago, we had companies like Angbang, Fosun, HNA that were going to be the first domino, that were going to lead to a collapse of the China financial system. Those companies were broken up, the debt distributed, and I think likely we'll apt to see the same thing around Evergrande. CNH volatility has been very, very low. I think if the market was really concerned about Evergrande going down and taking out the China financial system, you'd see CNH volatility, the renminbi's volatility increase significantly. That's not the case.